Your market news now. Stocks in Asia traded mixed on fresh signs of labor market resiliency in the U.S. that may support another Federal Reserve hike in interest rates this year. Locally, Vodacom Group has reported an almost 37% year-on-year jump in first quarter revenue to 35.7 billion rand. That was driven by the acquisition of Vodacom Egypt, and a weaker rand also helped lift the quarterly performance. To give us some perspective on the markets and perhaps even look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. I mean, given the run that we've seen in U.S. markets, as well as some of the market performance locally on the back of some of the news that's coming out, whether it's news related to the MPC or even earnings out of the U.S., how are you digesting local and global market sentiment right now?
Well, I think the sentiment is definitely starting to look a bit more positive. I think there's a growing belief that we've got some proper visibility on where inflation and interest rates are going. So, for example, we saw a very positive US CPI number again, inflation coming down quite substantially there. And I mean, a big part of that was in relation to the likes of property rentals. And we are probably looking at a reasonably positive number again next month. The main source of that likely to come out of the US used car market. So once again, we're probably looking at inflation coming down in that key market. And of course, a lot of South Africa's inflation is imported. So I think we're looking at the situation where we perhaps see a little bit of the external factors that have caused such pressure on our local inflation and interest rates, hopefully coming off.
On the back of that, we have the Reserve Bank leaving rates unchanged, and it was quite interesting to see that split, 3 voting for a hold and 2 members voting for a hike. Do you think that it was the right decision to make at this particular part of the rate hiking cycle?
Yes, I do. I mean, I think the issue with our inflation is that there is a supply side component, i.e. cost inputs, weak rand, energy, and so on. And the rate hikes have really got some limited capacity to influence that. So from that point of view, I think I'm happy with the decision to hold. I think they have got more news to come through, and they should probably wait for that external news to come through.
So we had trading updates out of Mr. Price this morning, and then yesterday late afternoon also a trading update out of Truworths. Which of the two caught your interest?
I think quite notable on Mr. Price. Look, it was a shorter dated trading update. Market seemed to quite like it. They pointed towards a very tough trading quarter. They have certainly been bedeviled by markdowns having to come through. There is obviously some distortion there in that they made some recent acquisitions, a Studio 88. But it was quite notable there to see the big difference that got made in having backup power solutions in their stores. You can see massive jumps in their May and June sales after implementing fully these backup power solutions. Quite noticeable there. You'll see big increases in turnover, but sales inflation, very, very high numbers there. I mean, we're looking at 13.8. So that makes a huge contribution to those numbers. Yeah, I mean, it does temporarily boost profitability, but longer term, these guys don't like a big inflation number like that.
Let's take things stateside and look at U.S. earnings season. What do you make of the numbers that we've gotten so far from the banks? And then let's throw in Netflix in the mix.
So I think broadly the U.S. season has I think surprised to the upside, which has something like 3/4, I would say, is coming over expectations. So on a very broad basis, the US earnings season looks fine. As far as Netflix goes, I think that's very much a special situation, because while they have a broad customer base, it's important to realize that They always were going to have a lot of competition come in. They firstly, when COVID kicked off, of course, they basically dominated the market. They had a great earnings run from that. But I mean, we've now had other players catching up, your likes of your Disneys and your Amazons and so on, and they're all now snapping at Netflix heels. And I think a lot of those players have more content than Netflix. And of course, Netflix is having to work its way through the whole password sharing issue and so on. So I think Netflix issues are company specific as opposed to broad based.
So when you look at the data coming out of the US, are you convinced, or is there an argument to be made that the US recession might take longer to manifest?
Well, I don't think it's going to manifest at all. And the reason that I say that is, firstly, I am of the belief that they actually have managed to pull off a so-called soft landing. A second point there, that US bond market continually kicking higher, it suggests to me that there's an expectation there of a resurgence in actual growth coming through longer term. So no, I don't think we're going to see a manifestation of recession.
Warwick, let's leave it there. Thank you so much for your time. That is Warwick Lucas from Galileo Securities.